Okay, good afternoon, everyone. Thank you for attending today's webinar. I know your schedules are busy, and we appreciate you taking the time out with us for the next 60 minutes or so and visiting and talking about our favorite trade setups here at Polaris. I want to thank Patrick and Infinity for being gracious hosts and partner for the past year. We're continuing to build our relationship, and it's been, the Infinity and Patrick, they're a class act, and I'm really enjoying our relationship as we continue to move forward here. So, today's presentation will touch upon what we consider our favorite trade setups here, and what we're really going to do here is I'm going to show you what we do. Um, and essentially, really not leave it too much on the table. There will be an offer at the end of the presentation to come in and visit us in our trading room and so forth to get a more detailed view of what we do throughout the day. But I wanted to make sure that you see exactly what we do, um, and we'll go through right to it today. All right, so. For those of you, I see quite a number of names here in the room that we are familiar with today, and a number that are new with us. So welcome to all of you today. Who am I specifically? I've been a trading veteran for 30 years. I've traded at the investment banks and various hedge funds over that time period. Primarily, my time in the market, I was a market maker, enlisted in NASDAQ stocks. At the firms of Shearson Lehman Brothers years ago, United Bank of Switzerland up until about 2004, so about 10 years ago. And then since I left UBS back in 2004, I traded for some high-frequency hedge funds throughout that period. And beginning, I believe, in around 2010 or so, we started migrating into the education field. So my experience is fairly broad-based between, again, listed in NASDAQ stocks, index futures, derivatives, various structured products, portfolio management, and so forth. So that's my background. Excuse me. I've moved into the education field as I've learned that the education for retail traders is very fragmented. There's a lot of educators out there, and there's a lot of quality educators out there. So I decided I would compile what I have known, my knowledge over the past 30 years or so, and bring it forth in a platform to display and talk about the markets and kind of demystify, the price action of what happens. So. My mission on a day-to-day basis for our members and the benefits that we provide here, simply, I just want to touch upon them, and we'll get right to the core of the presentation. But primarily, we want to improve decision-making skills for our traders. A lot of times, traders, they have the platform, they have some semblance of a methodology. They're really not quite sure how to put it together. And they read various books and articles, and they attend, as you're doing today, multiple webinars, and they try to kind of put this together in some sort of a mosaic. And in doing so, there's a lot of moving parts, and with those moving parts, it's very difficult at times to make decisions. And when you don't have a good structure in decision making, that breeds fear, that breeds hesitation, and we've all experienced the idea of that feeling of fear and not being able to pull a trigger and doing all that. So part of my goal here on a day-to-day basis with our members is to help improve their decision-making skills. All right. Many of you have poor trading habits. All right. With us here, our members have learned to disempower those older type bad habits and learn new ones. So that's going to be a benefit for you guys as well. I talked about demystifying price action. Again, the markets are, fast with the new algorithms out there, and it certainly can be mysterious in terms of, who's doing what. But in actuality, the markets are pretty straightforward, and we try to help you uncover, the real true, workings, underlying the market. It's not. Yes, it is driven by the big investment banks and mutual funds and so forth in terms of, the monies that they, move around. But you can trade right alongside them and actually use them beneficially. Okay, what we don't want to do is we don't want to, stand in front of a, an oncoming herd of, elephants, and because we'll get simply, run over. But we want to run alongside them. We want to use them as, the strength of a move, and kind of flow along with them. Now, you've heard, professional traders, the term professional traders and retail traders and novice traders. The way I view, traders out there is, I don't like to call, members, or refer to our members or any members, people out there, as a retail trader. We pay retail style commissions because we don't have memberships to the exchanges. So the brokers that we use, such as Infinity and others out there, they provide a great service, so we want to pay them for their service. But in terms of the categories of retail trader, professional trader, I view our traders in our membership, anybody that has a professional attitude, all right, is a professional trader. I categorize traders out there in two groups, the informed group and the uninformed group. The informed group are those that really know how the market's structured. It does not necessarily mean that because they trade or invest, millions and billions of dollars, that they're actually informed. But one would make, some sort of correlation to that. In terms of day traders, I've come across some very high-powered day traders that trade quite a lot of money, and frankly, I would categorize them as the uninformed. Okay, because even though they trade a lot of money, they're clueless. So when our members, in our membership here, they become informed, and that's part of what I'm trying to teach on a day-to-day basis is helping you make those decision-making skills, improve those, become informed, learn new habits, and simply learn to demystify action. So with that, let's just get right to the various descriptions of our trade strategies. And we're going to use the, as Patrick mentioned, we use the Sierra Chart platform, and I'm going to show you various configurations of what we do, and to give you a better idea of, some people use a very good graphically, all right, with the actual bar charts. Others like using the imbalance chart with the numbers. So we're going to show you a couple different configurations. But it all starts with, at the beginning of the day, I send out a daily trade strategy to our members, and many of you are on that list. What I do is I outline what we think the market's going to do that day. Again, we're not a matter of predicting, but we kind of set the stage for a bullish scenario and a bearish scenario. So that's sent out to everybody each day, and we'll show you that shortly. In terms of the trade strategy descriptions, we categorize them in a couple different ways. One, the opening range, right? So we have an opening range strategy, and that really comprises of the first 5 minutes of the day, all right? And what we're looking for there is what the midpoint or the average, the median point of the first 5 minutes, and that becomes our key price marker for the day throughout the day. Okay, so bullish above, bearish below. We'll show you some core examples of that. The next category is a premium and discount, and this is one of our core strategies, and what we use is a CCI crossover system, but we use it in a very unique way. We use a dual system with proprietary settings, and they are extremely accurate, okay, in helping us locate a point of entry that has a very good favorable reward risk ratio. And again, nothing is, certain, nothing is guaranteed, as we all know. But we all know the idea of buying a pullback in an uptrend and selling a pullback, in a downtrend. Okay, the the problem is with a lot of that is for a lot of folks is that they either buy it too early or sell it too early, and it goes against them, and they take some market heat. And then as soon as they can't take it anymore, 6 ticks, 2 points, whatever that may be, that's when the market, you know, amazingly, turns around and they get stopped out at the high or at the low. It's almost at that point where they really want, you should be buying it. What our premiums and discounts offer our members is a very specific, unambiguous location. Has an alert, has a bar, has a price. Okay, everything is really displayed for you. The next category is a stacker, and again, we'll go through quickly examples of all these, and then we'll get to some live charts today. Simply that identifies an actual trend shift for us. So it would be great, everybody wants to know when the trend's in effect and when has it shifted. This particular trade setup that we have actually shows that. All of our trade strategies, strict criteria, and this is the sequence. We always start from a key price reference zone, and then we'll use the key levels that we start off on the day-to-day basis. We have a chart for that. A pattern is either going to be a corrective pattern, a pullback pattern, all right, as discussed in the premium and discounts, or it's going to be a impulsive breakout pattern, and that's where we come up with our stackers. So it's price, pattern, and then the final component of that is momentum. Momentum really is there's a bull and bear reversals that says there, but that's the part of the trade that we get paid on. So we're trying to identify a key level, looking for a signal to get in, so some sort of a pattern. There's multiple types of patterns that we look for, and then once we're in that trade with a good reward risk ratio calculated, then when the momentum unfolds, when it continues in the direction we're seeking, that's when we start getting our payday, and we start scaling out of the trade and reducing our risk. Now, all of our trade setups, every single one, have the same qualities, and all methodologies out there that I've come across have these same qualities. One, they have to be clearly identifiable. All our trade setups over multiple time frames are clearly identifiable. Repeatable, all right? We want multiple opportunities to trade patterns to get into the marketplace, right? If we only have one every now and then, all right, it's not going to help us too much. So these are repeatable patterns, again, in all time frames. We spoke about quantifying risk, all right? It's very important that we keep our risk, small and under control. And of course, measurable for a profit potential. So these may seem straightforward and obvious, but they really are not, because if you think about, if you're just kind of trading from the hip, if you think the market's going to go up or you think the market's going to go down, what is it that you're really trading? Right? You're just trading, kind of a gut feel. All right. When you trade a methodology, whether it's ours here or somebody else's out there or one you've developed on your own, okay, think about that. It has to have these 4 qualities, because that's what keeps you looking for the same pattern over and over again. And there's a way in terms of measuring the success of that pattern. Okay, and then we have a decision process. And again, this decision process we refer to as the OODA loop decision matrix. That actually is an entire webinar in and of itself. But for brief purposes here, it simply stands for observation, price action. Orientation, we want to make sure we're on the correct side of the market action, whichever that is. And in the decision and action cycle of the decision matrix, we simply are asking if-then statements. So if this happens first, then the probabilities favor X happening. If something else happens first, then the probability shifts to a different direction. So we're actually kind of thinking the way an algorithm thinks. All right, and again, that gets into much more detail than we'll discuss here today. And then the action part of it is simply, your trade execution and the management of it. And again, we have specific techniques on that as well. All right. So what I want to do here is give you some outline of some of the examples of our trade setups. And again, don't worry that you're not going to absorb everything today, because during that 2-week period, if you decide to join up with us, you'll see multiple examples of this. But what I want to give you the idea of a webinar here is to give you an overview of what we do, and we're going to show you very specifics of snapshots here of prior setups. And then we'll actually look at today's action, which was fantastic action in the markets. Again, I don't mind whether the market's going up or down. I want tradable ranges and direction as an intraday trader. All right. So also one thing about that, primarily our trade strategies are focused directly for intraday trading. That being said, the trade strategies and the methodology can be used and are used by many of our members as swing trades, multiple day trades, weekly trades, those type of things. So whatever that we're discussing here today, think about it in terms of, okay, it's not just for the S&P, it's not just for crude oil and NASDAQ, but it is it can be used across a variety of instruments, the grains, okay, various energies, whatever it may be, individual stocks for that matter. But you can adjust the method to be used as a swing trading system as well, with some minor adjustments. So just kind of keep that in mind in the back of your mind. So the first trade setup that we'll look at is the opening range, and again, this becomes our key price marker, okay, for the day. And on this particular slide, what I've done here is this is a 5-minute chart of the opening range on S&P, and this dotted cyan line is our 5-minute average. So we take the first 5 minutes, okay, and then we look at the average. What we're looking for here is, this is our, if you want to call it, a dynamic bull-bear line. Okay, it's bullish above, bearish below, and then of that we have automatically range targets that are established. These are simply symmetrical range targets. Okay, they're nothing fancy in here. I mean, we just take a measurement from the opening range itself, and we do just a mathematical calculation that we have found that works very effectively throughout the course of the opening range. All right, so you'll learn more about those and how they're calculated and so forth. But what we essentially are used for is we use the 5-minute opening range strategy as a directional clue to what the market is trying to accomplish early in the day. When I was a market maker, this was a strategy that we use simply every day. Now, we refer to it as the opening range rotation. And the first 5 minutes is really when the market, all the pent-up buy and sell orders that have built up, in the overnight period. Again, I'm not talking about Globex. I'm talking about the pit session opening, and all in which coincides with the New York Stock Exchange. So all those pent-up buy and sell orders, from everybody's making decisions, and they're reading the newspapers, and however they formulate their investment decisions. Come together on the opening, and it's during that opening range rotation that the market makers simply execute all those orders. Once all the opening orders are executed, then the market creates some sort of a bias, all right, whether it's up or down. So that 5-minute average itself simply becomes a reference line that actually is quite important. All right, if price can trade back above and hold what we call clear and convert above that line and hold it without any further deterioration, as you can see here on the left-hand side. And actually, these were sequential days on this particular. This was back in December. It looks as though. If they can hold above that opening range average, then the market has an opportunity to reach these upper targets and then some. So you can see here on the left-hand side, that's exactly what happened. On the following sequential days, simply we had a gap down, all right, and prices here held below that 5-minute opening range average. And again, so that tends to put pressure on the market. Right? If price cannot get back above the opening range, then the bias of, the early morning bias is negative. All right, so traders and investors, they see that there's not a lot of strength in there, and they'll tend to start establishing positions, versus that opening range rotation midpoint average. So that's the core of our strategy. I know there are some opening range strategies out there that use gap fills and things of that nature. The gap fills of an opening range is all kind of built into what we do anyways. Again, the core of what we want to do for our members is to stay in alignment with the dominant force. Think about that for a moment. Staying in alignment with the dominant force, and whatever that is that particular day. Remember, we're not trying to counter trend anything. We're trying to stay in alignment with the the big mutual funds, the elephants. And if they're hurting to the upside, far be it from me to be shorting against them. And if you do short against them, be very cautious, and you may want to think twice about doing that. So counter trend trading, especially today with the algorithms the way they are functioning, is a very dangerous activity. Okay, I'd probably rather bungee jump first than I would want to counter trend trade. All right, so the next trade set up in sequential order actually is our bull and bear stacker. So we'll take an example here of a bull stacker. And what a bull stacker is, again, is a trend shift. All right, so some of the components that we use is that we have a fair value zone ribbon here, or zone, the shaded area. And we want to stay simply on the side of that fair value zone. So this is a 3489 EMA zone. Okay, so we use exponentials. And we want to stay primarily on the correct side of that. All right, that's where the wind is flowing. That's where the energy goes. We have a saying, actually, price goes where energy flows. So the energy is flowing in here on the left-hand side to the downside. Okay, we clearly do not want to be going long. We want to be taking opportunities to take shorts. And you'll see there's a signal there called the PREM for premium. We'll get to those in just a few minutes. But we want to primarily stay on the side of the prevailing strength, right? And that is really important, guys, to understand. All right. I know there's a penchant out there that you want to kind of fade the action and so forth. I always tell our members, if you're looking for excitement, really do something other than trading, okay, for excitement. Good trading, really very, very good trading, is staying with the trend. And if you stay with the trend action, okay, it's really not that exciting, but you will be, the odds favor that you'll be, more profitable doing so. So this bull stacker is a trend shift. So when we get a shift of our ATR, what we call our point break, and again, this is a proprietary ATR value that we have that we've created. It's much different than other ATR lines that are out there. This is specifically designed to identify certain conditions in price, and we call that a point break. That's the beginning of a trend shift. Okay, and once the trend shift is underway, we do not fight it. All right, this particular interval, bull stacker, can be used on any time frame, any tick chart, any range chart. Okay, so it's not specific to a specific time or chart size. All right, so the trend bars here, which is our green and red bars, simply define that there's a bull shift. And then the entry technique that we use, we're looking for that first pullback. The first pullback following a new high or a new low is always going to be the safest place to enter a trade. And we use what we call our right side pivot rule technique, which simply is as price pulls back, okay, once the selling is complete, in this example, once the selling is complete and buyers are coming back, that's where we want to enter. And that's whether we use a market order, whether we use a buy stop, Again, those techniques, entries are at the discretion of each trader, but the X here kind of marks the spot of entering. Okay, very simple, very straightforward, very effective, and it keeps the risk small, under control, versus the potential gain. Okay, and then one of our trade management techniques simply is to use that ATR line to stay in the trade, all right, for quite a bit. So again, we're not trying to pick a low of a move, right? There are just so many people trying to buy, a level. Okay, we shy against that. Although, it really strokes your ego when you're able to kind of, get a few ticks off the final low. That's great, but that's not what trading's about. Trading's about, making money. Trading's about staying on the right side. Trading's about making the right decisions. All right. It's not about trying to pick a high or a low. All right, so this is the example of a bull stacker. We'll see those today as well. Now the opposite, of course, all right, as you might just simply think about, is it's the opposite. So we have an uptrend. Uptrend comes to an end, all right, and most of the time these uptrends or downtrends will be ending at a key reference level that we've highlighted in advance. So we have an uptrend going, all right, and as you can see here, these little text that says DISC, those are discounts. Again, we'll talk about those in a few minutes as well. Discounts in an uptrend, all right, we want to be buying those. Finally, we get a shift. Again, just the opposite of what we just described. Point break, trend to bar shift, entry technique. We want to look to sell now the first pullback, and using right side pivot rule where those X's are. Very straightforward, but you'll be surprised how many people have difficulty doing this. All right. Again, we're not, we're pretty much leaving everything, out in the open here. All right, of how we do things. But what I've come across in my experience with traders is that in either learning a methodology, all right. I mean, we can show you something, all right, what you need to do, and you may gain some knowledge today. All right, knowledge is power. Knowledge is powerful. Knowledge is important. But knowledge without action, all right, is wasted energy. Knowledge without action is wasted energy. You need to actually, trading is an experiential, all right, phenomena. You experience trading. Once you've learned, all right, you want to experience trading. All right, you want to, experience the adulations and the lows and the highs and everything that comes in between. Once you learn a method, whatever that may be, all right, you want to experience it. So experience it means you have to practice it. You need to execute it. All right, you just can't say, yeah, okay, I went to a webinar, I found, I learned a few tricks, and I took a few snapshots of, hey, this guy's setup, and I'm going to do that. That's great, and then again, we encourage you to do that here, all right? But at the same time, 2 weeks from now, 3 weeks from now, you're going to go back to your old ways. And that's something that just so happens, everybody just seems to, fall into that trap. But you want to experience and practice this stuff. So practice is very, very important. All right, so let's just get to the discounts and premiums. So now there's a lot of highlighting here, but just bear with me and stay with me, okay? So what we've just learned about the bull and bear stackers, on the left-hand side here, we began a bull stacker sequence, okay? And again, the oscillator down below is the CCI, all right, commodity channel. We use a dual CCI, all right? It actually shows trending conditions, and it shows opportunities for pullbacks. Okay, so with this, we clearly see that the trend now has shifted from a bearish condition here, somewhat on the left, to a bullish condition. So the stars signal strong momentum, all right, and that is our first one of our tells that the market now has enough energy. Remember, price goes where energy flows. Okay, so there's energy in this move, at around 2064 here, price point. And as you can see, it continued moving higher. We got another series of stars up here at about 2068. Now at that point there's no pullback, so we're kind of chomping on the bit to try to buy this. Okay, we finally get our pullback. It's shallow, but we get our pullback. Okay, now we have a discount here. You'll see it says DISC 65.75. So this is real time, by the way. All right. And so this discount white bar fires, and it tells us, okay, what this bar tells us, it tells us that this pullback is pretty much run its course. So the sellers that sold it off a little bit pretty much have run out of steam. Now we're looking for the buyers to come back. Again, right side pivot rule. Okay, so this is a discount signal. It's a buy setup simply within the context of an uptrend. Now, as I mentioned, we're not reinventing the wheel here. Most traders, though, chase after a move, all right, and then when they finally chase after it, then the little pullback correction comes, and what happens is they find themselves that they bottom too high. They don't have the staying power. They're using a 6 tick or a 2-point stop. Price pulls back 6 ticks, 2 points most of the time. All of a sudden, they get stopped out. Price doesn't go down anymore, reverses, and they're left, licking their wounds. Wouldn't it be better to have an understanding of, that the market ebbs and flows, pulls back, and then have an indicator, all right, have a technique that tells us statistically, all right? And again, what the CCI does is it measures a statistical deviation or an average deviation in price statistically. That's why I've used CCI when I was at the investment banks for many years. So it's one of my favorite, if not the favorite indicator that oscillator that we have. But once that signal bar, that white bar alerts us, then we can start looking to buy it. All right, on the right side of it, not before, because it's not there yet. Once it's on the screen, we can look to start buying it. So I've labeled some points here, label 1 or bubble number 1 there with the arrow. That would be a potential for an entry price. Right side of that white alert bar. Stop here where the X is, that's where your stop goes. Okay, very tight. Most of our trade setups, by the way, maximum allowable stop is about 8 ticks. Maximum allowable risk, as we call it. Doesn't necessarily mean it's your true risk, but your maximum allowable. So just think about a 2-point stop for most of our trades. And you probably won't get stopped out. You'll probably get an opportunity to get risk-free first. And that's where number 2 comes in. So if you've entered, say, at point 1, price is moving up now. Again, the buyers are back into their, you're in sync with the energy where it's flowing higher. Bubble number 2, if you bought 2 contracts or greater, maybe you sell 1 contract, you sell 1 unit out, get yourself to the risk-free point. And then beyond that, once you're risk-free, and we actually have a tool, actually a dynamic tool that we're going to be releasing this week actually to our members. It's called the Risk Reward Position Sizer tool. It's actually dynamic. This particular signal that you see here on the screen, hopefully you have time, I'll show an example of it. It actually will highlight the entry line, stop, risk-free, and then 3 targets automatically. All right, so that's coming to our members this week for those that have software. And then the third point here is simply you can use a scale-out method, all right, or you can use a trailing stop as we discussed earlier. So this is a discount in an uptrend. Again, the idea of a discount is to measure a pullback statistically where we find a price point where the reward to the risk, all right, is favorable in the direction of a move. All right, and we're going to show some live charts from today that we did. Now on the premium, think of it exactly opposite. Okay, so we get a downtrend in effect, or we have a shift that occurred, all right, and the downtrend is in effect. We get a pullback within the context of a downtrend. All right, so you can see the price moving up here, and then by these yellow lines and this red line here, these are dual ATR lines, average true range lines. Is what we simply recall call these lines as our structure lines. All right, but price pulls back here, and you can see there's a few premiums that are triggering off here. By using the right side pivot rule, all right, we don't actually enter the trade till actually where bubble number 1 is a little bit low. Now remember, we're not trying to pick the high, all right, and many people try to do that, right? If you are currently doing that, guys, stop doing it, okay? Telling you that right now. Stop trying to pick a high or low. Rather, pick a point where the price has stopped, pivoted, and then the direction that you're seeking to go into. All right, selling them on the way up is not necessarily the best method. Now, if you are a big mutual fund money manager and you needed to scale out of or into some big contract size, well, that's a different technique. As a day trader, what you're looking to do is, hey, I want to be in alignment with this downtrend. So we had a big downtrend today, right? Yesterday or the Friday. I want to be in alignment with this downtrend. I don't want to sell them on the way up as it's the counter move to the trend. I want to wait for that counter move to complete. As sellers come back into the market, boom, I want to sell them. Gets to a premium condition, all right, with our signal here, gives us an alert bar. We know exactly what prices, all right, that the text here that shows is hard to see in this particular slide, but the text tells us, gives us a reference price of what price we can look to enter a short position. If you happen to be long for that matter, right, you can use that as an exit point as well, but primarily we're using these as entry points. The bubble number 2, that's where you're going to get risk-free. So if you sold 2 contracts or more off of that premium up above, you get risk-free. Again, the X is where we would have our stop point. All right, and then again, our retracement back up. All right, once again, price comes back down. All right, you can short the break of this low here at the 1993s, bubble number 1. Stop goes above the high. Again, you can re-enter the trade. All right, momentum here in this particular case is very, very strong. All right, now these are our core trade setups, guys. We don't, there are other trade setups that we have, premium and discounts, that I'm not showing today, but they're used in the context of a ranging market, right? A bracketed sideways range. Okay, the techniques for entry are very similar. They're simply in a non-trending condition. These examples here are in trending conditions. And again, trending conditions of where we're going to make simply our most money. All right, on any trade setup. All right, so that's that's where we want to be focusing primarily. But on those particular days where it's sideways non-trending, okay, we can still use the same technique, but with some modifications. Okay, now what I want to talk just a little bit about, before we move ahead, is just Sierra charts themselves. Now, I don't know, we have a lot of folks in here. I'm assuming there's quite a bit of you that use Sierra charts. Some maybe you'd be using Ninja Trader, maybe TradeStation, other platforms. What I've been using Sierra chart now for a better part of 3.5 years, and I will say that having used Ninja, they have some very good features. TradeStation, they have some very good features. But I must say that out of all the platforms I've used, Sierra chart really outshines. It's lightweight. Okay, it's our primary teaching platform in the room. Okay, it has a lot of built-in features that on other third-party vendors you'll be paying leases on a monthly basis. All right, volume profiles, delta type footprint charts, those style charts. Sierra chart calls it the number bars. Okay, you're going to be paying a lot of money. This is all integrated, all right, into Sierra, so it's really a functional. Oh, and by the way, for our members and anybody that has the software or interested in getting the software, all the templates that we use, all right, is already predefined for you. Okay. Some great position sizing and management features, and again, customized templates. So with this, let me switch over to some live charts, and that's where we all kind of want to get. All right, and I want to kind of zip through. Does everybody see this 1500 tick chart? Now these are today's charts here. All right, and I'm just going to kind of, we've already seen some core examples of the premiums and discounts. What I want to show you what we simply did today. Now, market was weak, we all know. Early in the morning, okay, this blue line here is our opening range average. So again, start from that opening range sequence. Okay, you can see. Let me if get the bubble here. There we go. Okay. Right up here on the left, we had a couple premiums, and you can see them, PREM. Again, these fired live. So these would be points where we took our trades today. Okay, so that would be a point in here we would execute a short, all right, with a stop above the high, as I highlighted. On the next one, all right, again, we had a multiple series of alerts. Okay, simply, all right, in this particular case, all right, below the low of those bars right there, all right, what we would do, simply, boom, put on a short position. So you can start seeing very early the power of being in alignment with the underlying dynamics of the market. Okay, now we don't want to be, going long any of this stuff. All right, I mean, if you do so, you do so at your own peril. All right. Staying in alignment with the core underlying force of the market is really your safest bet, and it's going to be, without a doubt, your most profitable. But the key question is, where do I enter? How do I enter? What point do I enter? Okay, our premiums, all right, and discounts answer that question, all right, without a shadow of a doubt. Now again, these are live setups. They're not after the fact. Sometimes, some indicators out there, that white bar doesn't paint until 3 or 4 bars later. These white bars paint in real time. All right, actually, once the condition is true, the bar is actually painting even before it finally closes. All right, once it's closed, once that bar is closed, it's locked in place. So you can have a very high confidence, all right, of taking a short trade. Remember, we're not trying to pick the high or low in here. We're trying to get the pivot part of it. All right, once it finishes correcting back up and the sellers come back, in line here. So in other words, trend is down, right? Action is down. We get a counter trend move, all right? Okay, so we get a premium that's developing within the context of a downtrend. We're waiting for it, the sellers, to start selling it again off that high. Boom, short it. Stop goes above the high. All right, and then start taking, profit, getting risk-free, on the way down. Okay, and we're not trying to pick the lows either. All right, so now with the opening range strategy, we got a pretty good bounce here, and prices stopped right at the opening range average, and this actually became a very solid short for us today. It was a structural short against the opening range, and it was probably one of our best trades in terms of singularity. All right, for profitability. But same thing. Price pivots, makes a high, pivots, right side pivot rule, bam. Okay. So again, I can go on with several of these charts as they unfolded throughout the day. All right, and they're going to simply be the same. Now there will be times where the prices will kind of form a little kind of range. Okay, now prices kind of stopped, stabilized here. We see a premium here at the 20, 50, 75s. Okay, again, that could be taken, all right, effectively for a 2-point trade or so. Most of our trade setups, on average, so this is a question we always get, how much do they pay? On average, all right, with average kind of range of the day, depending upon how you manage it, effectively. But we always are looking for 2 point to 2.5 point rotations in price. All right, that's our kind of goal. If I can get a trade where I can get a 2 point rotation each and every time, or at least a high percentage of the time, I'm gonna take that, every day, because the market here, and again, I'm only looking here on the S&P. Now this is effective for crude oil. So as a matter of fact, let's go over to a crude oil chart. How many of you in the audience here trade crude oil? Okay, it's a very popular chart, okay, or contract. All right, okay. Yeah, Bruce does. Okay, Mike. Okay, great. All right. Again, I'm just going to show you examples here of how effective this is. All right. So here is today's chart. This is a 450 volume chart. And again, some people use ticks, some people use range. Again, it's all effective the same way. But you can see here, prices, I think this was around the VWAP at the time, around the 49.50s. And prices for the most part were just simply kind of stagnant, within a range. Okay, prices finally made an attempt to move outside that range today. All right, we got a first pullback. Again, this was live today. This was around, looks like just into the noontime hour, Eastern time. Look at that premium that formed, 49.35. Okay, again, live, trade opportunity. Okay, so if you were watching, oh, and by the way, let me pull this down. Okay, this is part of our software as well. This is what we call our PTG Scanalyzer dashboard. Instead of having, 5, 6, 8 different charts open at the same time, what we've developed is basically a Scanalyzer to scan for premiums, discounts, bull and bear stackers. All right, and this was a number of months in development, and it's been recently released to our members at the end of 2014, and I've gotten rave reviews, about the usage of it from our members. But what this simply does is it compacts all our signals into one easily, dashboard display on multiple instruments and different bar types. So you can see a 450 volume, 900, 125 range on S&P, 750 tick, 400 volume, 144 tick, and so forth. So this kind of compacts all these signals that you see here on our screens. But when you see, for instance, you get an alert, audio and visual alert on crude oil at 49.35, you just click on the symbol, the chart will come up, boom, you'll see the signal right here. You decide, hey, I like that signal, it's breaking down, the fair value zone is shifting, boom, I short them. Short them, market order. Don't even try to get a limit order, just say market order sold. Okay, so then you can see what happened here in crude today. All right, so again, remember the 4 qualities of our trade setups, right? Identifiable. Are these setups clearly identifiable? Sure enough, they are. Are they repeatable? Have they repeated, right, in the same sequence? Sure have. Quantifiable in risk, right? We want to keep our risk small, under control, and measurable in some sort of profit potential. All right, and again, that's beyond the details of what we look for profits beyond today's webinar, but all learned within the context of the day. All right, in the education. So again, here's another example right in the middle there, 49.01, price retraced a little bit. All right, get a signal. All right, hey, I like that. It meets the criteria. It's qualified. Boom, short them at the market. Okay, where does your stop go? Stop goes above the high here. In crude oil, we're using primarily about 20-cent stops. All right, most of these entry signals that we're using here have no more than a maximum of a 20-cent stop. Okay, but as you can see, by entering it, on the way down, right, on the way down as it's regaining trend direction rather than on the way up, where you could, you sold them too early and now there's a retracement. Geez, it retraced right to that 20 cent or so level, and maybe you're using a 10 or 12 cent stop. Bam, stops you out, stops, reverses, and how frustrated are you? All right. Again, what our premiums and discounts offer everyone, all right, is a technique, all right, to get into the trade. All right. Now, the premise of the trades, by the way, this is an important part as well. The premiums and discounts here, guys, are not the reason for the trade. All right. There are other reasons that factor into it: the context of the market, the internals, the overall, broad market situation. Again, there are, key, zones, all right, that you want to reference zones, and so forth. These are techniques to get us in the market and out of the market very efficiently. But when it all comes down to, you can do all the fundamental analysis, all your technical analysis, all your Fibonacci's, all right, but when it really comes down to, nuts and bolts, can I get in effectively with a small amount of risk, and can I make, money doing this? All right. Again, these are live trades, all right, or at least live opportunities. I'm not saying everybody took these trades in our membership, but these are all live opportunities, and these were actually from today. So whether you're trading S&P, crude oil, NASDAQ, there's multiple opportunities, and again, that's part of the reason why we've developed the Scanalyzer dashboard, because we want to be able to be alerted to, a signal or a type of condition, bear or bull stacker, okay, that we're waiting for. So instead of staring at the charts all day long, okay, you may be focusing on maybe one or two, and in a nice relaxed manner, and then the Scanalyzer dashboard, hey, you know what, Sam, all right, there's a, check out this premium on crude oil here at the 49s, okay? You take a look at that. Yeah, I like that. Boom, market order, sell it. Don't even mess around, guys, with limit orders. You want in, get in. You want out, get out. Use a market order. All right, or at minimum, use a buy or sell stop to get yourself going. All right. What I want to do here is I want to show you guys, how many of you use the number bars? All right, these are great features. I want to also show some of the features that we use. All right, and these are all pre-templated chart books that we have for Sierra Chart. So I want to show you some of the various configurations that I've developed for our members. All right, and to show you similarly, what they look like on a number bar basis. And this is what we call an imbalance chart. Now, if you don't understand what the imbalance charts are, or the number bars, there's quite a bit of education, all right, out there, but it's something that some folks really like the use of number bars. They're more numbers oriented rather than visual. I've learned both over the years, so I can snap back between either. But there are some third-party vendors, as you know, out there that specialize in this. And Sierra Chart has absolutely done a fantastic job in that area. Okay, so as you can see here, that blue line, again, our opening range, all right, at the 2060s today. All right, prices rotated up to those 2060s, and remember, this is where we were able to take short positions, all right, earlier for that big move down. Okay, so in a case like this, what would we be looking for? All right, so it's essentially a premium, all right, but it's not displayed, as such here, but it's essentially a premium. And so what you saw here is you saw buyers push the market up, found a high, all right, came down a little bit, bounced back up, but on this particular bar, or these sequence of bars, you see the red numbers? These are imbalances, meaning that these are sell imbalances hitting the market. All right, these are sell imbalances right here hitting the market. So that means there's more contracts trading on the bid side of the market than there were on the offering side of the market. So think about these bars here, all right, as looking at the trading dome. Okay, buy side here on the right, sell side here on the left. So bid side on the left and ask side on the right. So these are like mini domes, all right, and this is a 1.5 range, so 6 ticks on each bar. So effectively what you're seeing here is you're seeing the selling coming in on the bid side of the market. Now, if the market was going to continue higher, we would want to see, bid side, offering side trades, right? So the offering side, so the buyers aggressively bidding it. Well, they did that here on the left-hand side all the way to the opening range. Buyers got filled. The buyers no longer had the buying power. Sellers came in, right? Bigger picture today, right? The context today was weak. So sellers come in and they start selling it here. So these type of bars here at these points, either on this one or on this one, or even maybe this one, okay? These are all sell points. So we could short them here, simply market order. You see sell imbalances, sell them at the market, sell them at the market, sell them at the market. Stop goes above either prior, 6 ticks to 2 points high, all right? And, that's where your stops would be here. And again, so you can use the exact same, you can use your larger charts, all right? And I'm going to actually show you a 5-minute chart here as well. So I'm sure some of you use 5 minutes as a chart as well. So you can use your 5-minute chart, all right, at the same, the same way. So these are some great tools. You can get some real tight entries too. What you're simply looking for on the imbalance chart is you're looking for that shift from the buyers paying the offering and moving price up to getting filled. And typically when you get filled, there's a lot of like two-sided trade action and the market just simply is not going up anymore. Then you're looking for those reversal signals, right? So price, pattern, and then momentum, as we discussed at the outset of the webinar. All right, so this is a great way of taking a look at the kind of the same thing. Let me show you the 5-minute chart that we did today. Now this is, again, today's 5-minute chart, and I have overlaid premiums and discounts on a 5-minute basis. So again, somebody had asked earlier about what time frames are effective. All the time frames are effective, okay? And so you can see here, again, once again this morning, the opening range, all right, high, opening range low, and midpoint, that cyan fat line. Prices pulled back, all right, in real time. Now this is on a 5-minute basis, so you think about the time. A lot of people say, oh, the markets are just way too fast. Well, okay, slow it down for yourself then, if that's the case. So using a 5-minute chart, you can actually slow down the action and say, okay, I have a 5-minute premium signal at the 5-minute opening range average. Okay, how do I trade that? You could drill it down into your imbalance chart that we just went through, the number bars, or you can say, if it breaks the low of these premium bars, right? What prices were those? That one looks like it is about 58.75. Okay, so 58.75, so what is it, 58.50 May? All right, let's just say. Shorted at 58.50. Stop above the high. Okay? Any heat on this particular trade? No. How would you enter the trade? Use a sell stop, use a market order. Again, your technique, all right, of entry, your preferred choice, order choice. All right? Don't try to say, oh, I'm going to try to sell them on a limit on a bounce. If you get a premium or you get a signal, sell it. At least sell part of your position. If you're a 2-contract trader, sell one. You can always have the opportunity to sell another a little bit, a touch higher if that's what you want. We actually run workshops on Wednesdays that go through a lot of the detail of what we're talking about here, guys. Our education has a lot of detail in it, all right, as well. Videos, documents, and so forth. So again, what we're just trying to do here is give you an overview of what we look for. The detail, as they say, the devil's in the details, and our details is in our education. But as you can see, hopefully you've gotten a, this was a great trading day, by the way. All right, this was a, I mean, and we don't trade, the number of trades we have in our trading room is maybe, 5 or 6 at most, okay, on any one day. It all depends how active the trade, session is. But really what we're looking for is not quantity of trades, although again, we want to pay our brokers, right? Again, they need to, make a living as well. All right, and there's a signal there, oil premium. But we want to be quality, and we want to, the more money we can make, the more good trades we can put on, all right, the better decisions, making, that we can, work with, ultimately pays dividends over time, and we want to have an effective methodology. All right, so this is our effective methodology. If you would indulge me one last minute or two on here, what I want to show you is this is a ninja chart. It's easier to show on this particular chart, this example. The position sizing algorithm that we have. So you can see here. Let me just fatten the chart up for a second. All right, this is something new that we're just putting out to our membership. All right, actually, this particular, that's a little too fat, isn't it? This particular tool right now is static, but we are outputting a dynamic one this week. So in other words, you see this premium here, okay? So this premium, okay, at 48.50. So we have a tool. You'll see the account size in the top right. This is an example of a $30,000 account risking 1%. So that means $300 per trade, okay, maximum risk. So you get a signal like this. The software right now, currently it's a static tool, but it will be dynamic. So if you just visualize this for a moment, all right, yeah, exactly. I understand. All right, but I need to show this particular tool. So this is going to be available on Sierra charts as well. 48.50 with a stop above the high here, and it automatically will position size you, and also you'll have automatic targets. Okay, so this is all part of the Sierra chart platform, and these will automatically paint anytime a new signal comes up. All right, great. So let's conclude here, and what I'd like to do is I appreciate all the time that you guys have taken to stop by and visit with us today, and if you're interested, come in, take a 14-day free trial to our trading room. It's normally 7 days. All right, we're extending it, twice that for our friends here at Infinity and you folks. At the same time, if you are interested in taking a free trial concurrently, if you have the Sierra Chart AT platform, all right, we'll offer a concurrent 14-day free trial. If you're not a current Sierra, an Infinity customer or using Sierra, I highly recommend, taking a demo, all right, contacting Patrick or one of the other representatives there. Set up a demo, all right, and we can get you working on the platform. It takes about no more than about 10 minutes to get you fully up and running and operational, okay? In terms of our trading room, we're open all day, and some trading rooms out there only, will trade 2 or 3 hours a day. We're here all day, and pre-market briefing begins at 9:15. All right. As a trial member, you will get a copy of our daily trade strategy report that we send out as well. All right. So yeah, our membership is really friendly. Our members will, if you reach out to our members, in our trading room, we also allow intercommunication between members. Okay. So, all right, and that's about it that I have for you. Hopefully you take us up on our offer to come visit with us. And again, here's my contact information. All right, if you want to write that down now, if you want to give me, you can give me a call, drop me an email. I'm very accessible to everybody on a day-to-day basis. And again, either contact Patrick or your Infinity rep to get yourself set up with us on our Infinity Sierra Chart Platform AT. All right, so with that, I've gone about 1 hour and 4 minutes, so I'm sticking right to the presentation time. And again, I want to thank everybody, and I want to thank Patrick and Jim Mooney and the folks over at Infinity for hosting this presentation for us. I hope you've enjoyed it and you've learned a little bit here. And looking forward to see everybody in our trading room here. So sign up and come visit with us. All right. Thanks, everybody. And I'll pass it back over to you, Patrick.
Yep, thank you. Appreciate that, David. I'm going to go ahead and take the screen here for you, or from you, just a moment.